What if I told you that the tech giant that once powered almost every company in the world is now fighting for the survival? That's right, we are talking about Intel, a name that once synonymous for innovation, now struggling to keep up. In this video, we are diving deep into Intel's dynamic fall from grace. We will uncover the story behind Intel's decline, peeling back the layers of market forces, financial hurdles, competition, and even some questionable decisions that costed them heavily. But this isn't just a story of failure. It's a case study packed with lessons for entrepreneurs and marketers alike. Let's break down the Intel's journey and show you why staying on the top of tech is harder than ever. Intel was founded in 1968 by Robert Noyce and Gordon Moore in Mountain View, California. Initially, the company focused on making semiconductor memory products, but soon transferred into producing microprocessors, that essential components that act as the brains of computers. Microprocessors allow computers to execute tasks, run softwares, and process data, essentially enabling modern computing as we know. Since then, Intel achieved some of the key milestones in tech landscape. In 1971, Intel introduced the first microprocessor, the Intel 4004. The tiny chip could perform calculations and control devices, which was groundbreaking achievement in the tech world. In 1980s, Intel becoming the leading force in the personal computer PC market with its x86 architecture, a design blueprint for microprocessors that became the industry standard for PCs, leading the rapid growth for the company. In the 90s to 2000s, Intel expanded into various markets including servers, powerful computers that manage data and network resources, and embedding systems which computers build into everyday devices like phones, smartphones, appliances, cars, etc. Intel's early commitment to innovation helped it become a leader in technology, but it's also set the stage for challenges as the market evolved and the competition began to catch up. The global semiconductor market is enormous, and they expected to reach a valuation of $1 trillion by 2030. Semiconductors, which are material used to make microchips, are vital in electronic devices, from smartphones to automobiles. As the demand for smart devices and technology continue to grow, so does the importance of this industry. However, Intel has faced difficulties in keeping up with this competition. In 2023, Intel reported a revenue of approximately $54 billion, a significantly drop from its peak of $79 billion in 2021. This reflects the larger industry shifts which competitors like AMD, Advanced Micro Devices, and Nvidia have gained considerable market share. Let's compare the revenue figures for the several players. In 2023, Intel has a revenue of $54 billion, while Samsung had $85 billion, and the rest you could see on the screens. There are several factors influencing semiconductor market. Demand for electronics. As more devices connect to the internet like smart home devices and wearables, the demand for these chips has increased. Technological advancements, innovations such as artificial intelligence, machine learning required more advanced and powerful chips, driving the need for more continuous product development and improvements. 3. Supply chain issues. Disruptions caused by events like COVID-19 pandemic created bottlenecks in the supply chain industry. This delayed production making it harder for companies to meet demands, leading the shortage and longer deliverable times. Intel's financials data shows troubling trends. In Q2 2024, the company reported a revenue of $12.8 billion, slightly down from $12.9 billion in the same quarter last year. Additionally, Intel posted a net loss of $1.6 billion, meaning its expenses are far outweighed the incomes. The Intel's revenue dropped from $79 billion in 2021 to $54 billion in 2023, a sharp decline of nearly 32%. The net income decline. Intel's net profit margin, the percentage of revenue left as a profit after all the expenses, has fallen dramatically from double digit to just over 2% in recent quarters. Stock performance. As January 2024, Intel's stock price has declined significantly, signaling that investors were skeptical about the company's ability to recover. Intel's profitability has also been hurt by raising costs, particularly in R&D, research and development, and manufacturing. Operating margin, which measures how much profit a company makes from its core business before taxes, other expenses, was 15.3% in Q2 2024, worse than the 7.8% in the last year. This negative margin indicates Intel is struggling to make money from its operations. Intel's R&D spending increased to 5.6 billion in Q2 2024, up from 5.5 billion in previous year, reflecting its efforts to invest in new technologies despite declining revenues. What does this mean? When a company's revenue declines but the expenses such as R&D continues to rise, it becomes increasingly difficult to remain sustainable and profitable. This creates pressure on companies like Intel to cut costs and find new ways to generate revenue, to find innovation and to stay competitive. Let's talk about the strategic missteps of Intel. One of the Intel's biggest problems has been its inability to keep up the pace of technological changes. The company long followed Moore's law, an observation by Intel's co-founder Gordon Moore. The number of transistors on a chip would roughly double every 2 years, making chips smaller and more powerful. However, Intel encountered delays in advancing these manufacturing technology to smaller, more efficient chips like 10 nanometer technology and beyond, which left it trailing behind competitors like TSMC, Taiwan Semiconductor Manufacturing Company. So what happened? These delays created an opening for competitors like TSMC to leap ahead with the faster, more advanced chips, which in turn attracted major clients like Apple, AMD. Also, leadership changes. In early 2021, Pat Gelsinger was appointed Intel's CEO. With a background as a technological veteran, Gelsinger was expected to renovate the companies by improving manufacturing efficiency and driving innovation. However, while these have been positive developments, results have been slow to materialize and Intel's performance remains under pressure. Strong leadership is essential in navigating through challenging times. For a company like Intel, which has fallen behind, a CEO's ability to execute a clear and effective strategy is crucial for regaining lost ground and returning to the growth. And the rising competitors. Intel's competition have been using its delays and missteps to their advantage. AMD has captured significant market share with Ryzen processors for consumers and EPYC chips for servers. These products offer better performance and energy efficiency, often at lower prices than the Intel offerings. Nvidia, which originally specialized as a graphics processing units (GPUs), has expanded its area into AI and data centers and two fast-growing markets which Intel is still trying to catch up. TSMC has cemented its position as a leading chip manufacturer, producing chips for tech giants like Apple, Qualcomm, thanks to its cutting-edge manufacturing technology. In a competitive market, when rival offers superior products at lower prices, it can cause customers to switch brands or services, negatively impacting sales. This dynamic forces companies like Intel to innovate consistently and ensure their products stay attractive to customers. So what's the future outlook of Intel? To reclaim its competitive position, Intel is pursuing several key strategies. Investing in R&D. Renewed focus on research and development is critical for innovation. Intel is betting on new technologies like AI to drive future growth. Cost-cutting measures. Intel announced plans to reduce its cost by 10 billion, streamlining its operations to improve profitability. New product lines. Intel is introducing AI-focused products to capture emerging markets that are expected to grow rapidly over next years. While these strategies show promise, Intel's future of success depends heavily on how well the company can execute them in a fast-paced technology world where the quick adoption is essential for survival. Here are some key takeaways for entrepreneurs and marketers. As we reflect Intel's journey, here are some valuable lessons. Adaptability is key. The tech landscape is continuously changing. Business must be focused, flexible, and ready to adapt to evolving market conditions. Innovation over legacy. Relying too much on past successes can lead to stagnation. Continuous improvement innovation is essential for a company to remain competitive in the long term. Understanding your competitors. Keep a close eye on your competitors. Learning from their successes, failures can help them refine your own strategies. Investing in talent. Strong leadership and skilled workforce can help steer the company through difficult periods. Making talent investment is crucial in long-term success. Customer success focus. Understanding your customer needs and adopting your products or services according to their needs fosters loyalty and drives growth. Intel's decline offers important lessons in the dangers of complacency. While it was once a symbol of technology, innovation and dominance in the semiconductor world, Intel now faces fierce competition and the challenges of recovery. However, by embracing change, focusing on innovation, and prioritizing customer needs, there are still potential for Intel to regain its position as a market leader. Stay tuned for more business dramas and marketing sagas. Don't forget to hit like and subscribe. Until then.